So it starts from the beginning, and I'll keep it as brief as I possibly can. So I was actually born in St. Petersburg, Russia. I spent the first 3 years of my life in an orphanage there. My first flip, I made a profit of about $250,000. And with that profit, I was like, wait, hold up. Now I have some runway to be able to take a step back, support my family, be there for my wife and my baby. And when you have that many people and that much money, the team matters exponentially. Like when you had a group project at school, you need to make sure everyone in that group project are A players. If you don't have that, it is not worth playing.
What lie do real estate investors often tell themselves?
What lie do risks is the next deal? Next deal will be the difference. Anything that you can cut out of every single day that gives you more time in the present is worth trying to do.
Misha Kaufman joins me here today. You can learn what his team is up to. Head over to craftcapitalinvestments.com.
Thank you so much for having me, Jack.
How did you find your way into real estate investing?
I'm laughing. It's a very weird journey. So it starts from the beginning, and I'll keep it as brief as I possibly can. So I was actually born in St. Petersburg, Russia. I spent the first 3 years of my life in an orphanage there. My family that adopted me from the United States, they were involved in real estate. So from kind of the age of 3 to 20, I saw them, how they operate, did my own thing, and then decided I did want to join the business. They owned 60 multifamily properties across the US. I said, hey, I want to come be a part of this group. And so I started actually on the property management side, a third party property management as a porter. I picked up trash on a 300 unit property in Ohio and worked my way up to leasing to essentially managing a 90 unit multifamily property there. I was promoted with a third party company to be a district and regional manager here in Texas. By the time I left that part of my career, I oversaw over 500 multifamily units over a course of 6 years. And I've now transitioned only to the asset management side of the business, but I bring that property management experience with me. So that's the short nutshell version of where I am today and how I got here.
So that experience managing the properties didn't scare you off, huh?
No. I wish it did, but before I got into the management, I was a teacher. So I taught in Oklahoma City, 120 fifth and sixth graders. So you end up dealing
So
with
that scared you back into real estate.
it's piggyback, but it's also a lot of the applicable stuff, your conflict resolution and solving a lot of problems for a lot of different people, which is essentially what real estate is. Real estate is such a psychological necessity for people, right? So that brings out the best and worst in them, but it's something that I've learned to kind of deal and operate with. I always imagined that, my students, because I worked primarily with a program called Teach for America. So a lot of my students were, low income, maybe behind in their reading levels. And you have to, before you can teach them anything, you have to build them a sense of safety. They got to trust you so that they can kind of let their psychological guard down so that they can learn. And that's exactly what we do in the real estate space is you got to get tenants guards down so that they're able to be comfortable and want to stay there long term. So a lot of kind of applicable things, but I've learned how to deal with a lot of hard conflict resolution and hard problem solving, which is what we deal with in the real estate industry on a day-to-day basis.
You mentioned your adopted parents that they were involved in real estate investing or real estate. Was there any resistance to what they were doing at that point? Yeah, I've just asked because I see that it happens. I've had repeated guests where their parents were involved in real estate. They did their best to stay away from it because they
Yeah.
saw the amount of work and effort, and then they somehow found their way back into it eventually.
Yeah. I'm laughing because it's probably the opposite. So my parents wanted me to do their own thing. Like they're like, okay, well, you'll probably have enough if we're doing what we're doing. So like, we want you to do your own thing. So I don't think they ever wanted me to be part of the real estate business. And I actually did more of the academia route. So I went to Columbia University, got my undergrad, got my master's degree in business. But, me looking at it from more of a financial perspective, I was like, there's no better way for me to build my wealth than to actually be involved in multifamily real estate. From my perspective, people have their own ways. And that drew me back in. So I kind of had to convince them to let me be a part of that side, because I think they always wanted something different that wasn't dealing with toilets and residents and all that stuff. But there's just so much wealth and long-term creation there that it made a lot more sense than me going the corporate route and not being able to build what I wanted to build.
It's one of those things that you I've had these conversations quite often lately with my kids because my daughter is at the age now where she just finished school and she's trying to find her way in life. We talk about this concept of generational wealth when it
Yeah.
comes to real estate investing, but I'm convinced that it's not necessarily providing them the money and capital. It's the realization that they don't actually have to go down that 9 to 5 route. My generational wealth would be them being able to find some sort of self-employment
Yeah.
along the way.
Yeah. I think that is so powerful. It's not the route that I had before, which is weird because you'd expect, with my family as deep as they were in the multifamily industry to like want to bring me there, but they never did.
Well, everybody, with this journey, there would have had to have been some bumps along the way. Can you give us
Oh,
some,
yeah.
like, what some have been some of the biggest challenges you faced and how did you overcome them?
Well, I'm in them. So, but that's the reality. This time last year, actually January of last year, I found out that we were having our third kid. So we have my wife and I, we have beautiful 5-year-old, 3-year-old, and then about to be another baby. So a 1-year-old. At that time, I was directly working in the property management space and I was working really long hours in order to make sure that the properties are running to the way that they need to be. It takes a certain degree of effort, just sweat equity, all those things. And the reality was I wasn't going to be able to give that what it needed with having a third baby and give my wife the support and things that she needed. So we bought a new house and that house happened to have a pool. It led to my first flip. The person that was helping out with the pool, their brother had passed away. I took a look at the house and it was significantly under market value. So I ended up buying and flipping it. On my first flip, I made a profit of about $250,000. And with that profit, I was like, wait, hold up. Now I have some runway to be able to take a step back, support my family, be there for my wife and my baby while we're growing out our multifamily business. But multifamily is a little bit different. It's a steady way to build wealth long term, but you're not going to get $250,000 in 3 or 4 months. It's just a different world. So I went head into single family flips this year along with the multifamily. Ended up purchasing over 8 houses. Some of those were mistakes where I bought them too high. Some of them were huge kind of wins where, I bought them sub 500, ended up being, over a million ARV. But even though I bought them right, we talked about this later, the market has changed, right? So the market of, usually in Dallas, Texas, your May, June, July are like great times to put houses on the market. People buy quickly, especially if they're quality products. Right now, we weren't anticipating interest rates being as high as they were. We weren't anticipating the supply of inventory to be as high as it is. So there's a lot of supply. And at the same time, there's a lot of really hesitant buyers. And I imagine having, $5 million houses coming on the market in that time frame, that's the recipe for not disaster, but needing to figure stuff out. So for us, what I decided made the most sense was to refinance those houses into long-term loans and transition them into short-term and medium-term rentals. It's the good side of buying like really good houses in really nice areas in Dallas is there is a market for the Airbnb space. So I've made that transition, and one of them is leased for $15,000 a month on on a $4,000 mortgage. So that's great. I got 3 more that I need to get into a similar place. So that is an example of kind of the obstacles that I've gone through from the high of getting, that 250,000 initial profit to the downsides of flipping, or you're beholden to some weird market conditions that can affect even really smart decision making. So that's been the obstacles that I've dealt with recently, but it's been a really fun process and I've learned a lot, but I think it will help me be more resilient in the future.
Yeah, I think we were all hoping that Trump would have gotten his way on that one, where we were waiting for the Fed to finally drop interest like just a week or two ago, and then it didn't come. And I've seen something about for every drop, a million buyers enters the market. That would
Yeah.
make a world of difference for us at this point.
Yeah, it makes perfect sense. I mean, even like, I'm sure it's similar for you, Jack, but like, so the first house I bought, I think it's $275,000 in 2019, right? But interest rates were 3%. Technically, you know, 2, 3 years later, my mortgage would have been double. I wouldn't have been able to even qualify and afford that mortgage. So when you're dealing with those higher price points, when interest rates are that high, just who's gonna qualify to be able to afford those payments? So it's a pretty vicious cycle, and we'll see things slow down until interest rates come down. But it's an interesting thing to see that shift from a buyer's market to a seller's market where you're seeing price cuts happening. How do you navigate those situations? From a third party observer, it's very interesting, but when you're in it, it is very painful.
Well, you mentioned you had to make a little pivot and started the Airbnb type route on some of these. In my market, those would be pricey properties. What have been some of the interesting things you've learned from that experience? Had you even done any kind of short-term rentals?
No, I've not. I had not done short-term rentals in the past. And to be clear, my business is multifamily. So like that's where I spend majority of my focus, energy. That's where I build my long-term wealth. For the Airbnb, what I did is I just found a high quality management company to operate the assets. They have a unique strategy. We focus away from the short-term rental market, more for people that have insurance claims or they need to come in for work-related situations. All of my experience, because I literally worked in property management for over 6 years, with a different income bracket, not like people that would afford $15,000 a month. A lot of those things are applicable on a really small scale. So just figuring out, okay, this is how we're going to make sure we don't have any plumbing issues. This is how we're going to make sure that we have upkeep to make sure we don't have deferred maintenance problems. I'm able to kind of coach my manager through those aspects that I've done multiple times, but where they are helpful is like, how do you actually engage, bring in a tenant at that price point, which I've dealt with people that are paying, closer to 800 to maybe 1,800 a month.
So let's dive into the multifamily a little bit. We talked a little bit about how the market has changed the single family, but how has it changed your multifamily, particularly finding opportunity?
Yeah, great question. I mean, it's changed drastically in multifamily. I think for us, because we are very nerdy, it's been an absolute great opportunity, buying opportunity for us. So I think in the course of the last, call it 6 months, we've underwritten over 150 deals, visited the ones that made sense. So we find opportunities that we just wouldn't have before. Right now, we're under contract on a property in Irving, South Irving, which is a great location, not high 95% occupancy. We are under contract for a property at 76K a door, where the current rate in that area, 110K a door for a similar product, right? So we found that there were some conditions involved in there that led us to purchase it, but it's also, we do the diligence of sorting through multiple things. We found a story that made sense. Someone that had owned it for 20 plus years passed away, went into trust. That trust, didn't manage it properly. So your rents are well below where they should be. It was also not third property managed. So their books were a little bit out of whack. They only had a T5 instead of a T12, which all leads to an opportunity for us to get a really great product and a great value add opportunity. So what we have found, to go back to your question, is because there's so many uncertainties, there's less buyers. And for experienced buyers, that gives us the opportunity to negotiate terms the way we would like to and find assets that are undervalued that we are able to bring back to where we want it to.
Are you primarily sourcing these directly from the seller or getting a broker involved?
We work with brokers. So Gabriel Kraft, who is our CEO, he has great relationships with most of the brokers in DFW. They know him on a first name basis. So we source deals primarily through brokers. We also source through, we source off market, we'll source through some wholesalers that work directly with multifamily buyers such as ourselves. We have a wide net that we use, but because we have deep relationships with brokers, we're established already in the DFW market. We're in the door to be able to work with them and them wanting to do business with us. So that's primarily what we've done. We've also focused solely on DFW, right? We don't look at Houston. We don't look at San Antonio. Like, this is where we live. This is where we also operate. So we're able to kind of laser focus here because we have a presence.
So have you been finding, because of the current market, are these sellers a bit more open to creative approaches?
The answer is yes and no. The bigger point is, I think people that are selling now are distressed, which means they kind of have to sell. No one wants to sell in a down market. You want to prefer to wait into a different time. So because a lot of those people are distressed, you have some leverage in negotiating and getting the terms that you want and that are favorable to you, especially if you're one of 2 or 3 qualified buyers and those other 2 maybe don't have the track record you have. So a lot of it is just kind of the conditions that come up in terms of the leverage you have just because of the situation that we're currently in. But, I think the ones that we've had in terms of concessions or things like that, not huge, but that's also because we've got them at very affordable prices already. I think where it's helpful is you don't have to put a lot of EMD in all the time. They'll work with you to have due diligence at a time frame for us to really make sure we understand everything that's going on with the property. They're more apt to have a relationship and dialogue, especially if we're respectful and we're clear about why we're asking for that stuff, than there would be in the past to just like, oh, well, I'm just going to go on to buyer number 2 or 3 or 4 or 5. That's not the situation right now. So there has to be those more conversations, which I assume probably, Jack, is probably similar to what you're seeing in the single family world too. When there's not as many transactions happening, you got to have a little bit more conversations.
Yeah. And in fact, you're absolutely right. I've actually been seeing sellers, although they've already signed an agreement with a realtor, they'll sidestep the realtor sometimes and call us directly
Yeah.
to try to drum up, because of the market. It's very strange right now. I hadn't seen that type of thing before, where people will reach out to us in spite of their realtor.
It makes perfect sense too. I mean, also what I'm finding, I know we're drifting back to single and we'll go back multi-single, is that you start to learn too, like, who are the good agents and who aren't so good. Wait, like in a great market, it's easy to see who has like, everyone's doing transactions. There's the level of nuance that's needed, but I can understand if someone's saying, hey, my agent's actually not getting out there and they're not finding business. I'm going to just take it on myself to make some phone calls. Makes perfect sense.
So we're going to kind of dive into some advice that you might have for investors looking to get into multifamily investing. But before we do, I want to remind everybody, we're talking to Misha from Kraft Capital Investments.com. You can learn more information there. If you found some value in what we're talking about so far, this show only grows if you share it with an investor friend. So consider doing that. If you're watching us on YouTube, give us a like and subscribe. So, Misha, I'm sure you've seen quite a few people get into or try to get into multifamily investing. And I've had a few people on who mentioned wishing they would have gotten into multifamily investing sooner.
Yeah.
But let's give people kind of a caution here a little bit. What are some of the mistakes you might have noticed people making when getting into multifamily investing? What should they try to avoid?
Yeah, great questions. There's a million things to avoid is the long story. I'll try to provide some examples and context. I think there's a lot of misconceptions, right? That multifamily is a get rich quick option, and it can be, right? But there are a lot of pitfalls in that process. So one thing is in the multifamily space, especially what I do is what I would call syndication space of multifamily, which means that I'm not buying an apartment complex by myself with my own money. I'm buying an apartment complex with a group of partners that are also bringing on a group of other investors. And when you have that many people and that much money, the team matters exponentially. Like when you had a group project at school, you need to make sure everyone in that group project are A players. If you don't have that, it is not worth playing. So that's the biggest thing is for people that I've seen that are just wanting to get their foot in the door, they end up working with the wrong team before anything else. It's the wrong team where it's either inexperienced, people aren't rolling out their sleeves to get the job done. There's not a clear understanding of who does what. If you don't have that, the deal is going to fall apart. So that's the first mistake that I see made significantly. The second is just from a capital perspective. You can't put all of your money into one deal. You have to be strategic and do smaller amounts until you learn the business. What's weird for people that are starting usually is they don't actually probably have that much capital and they also don't have much experience, but they've seen that it's a way of building wealth. So they're kind of all over the place, but master of none. So for those individuals, I would say like you have to figure out what is your specific superpower that you're going to bring to the table that's going to add value to investors, that's going to add value to the deal. And that's going to make it so that it's going to be worthwhile to everyone. So for some people, I think it's capital raising, being able to do that at a high level. For other people, it's, maybe someone like myself that's worked directly in property management and seeing that from the ground up. Some people may have a construction background, but you have to, for people that don't succeed, I feel like they don't have a clear lane that they can be the best at to be able to add value to that deal and to that team.
It is kind of, especially being an entrepreneur, you have a tendency of spreading yourself too thin and trying to do too much. And then it's so easy to get focused on things that actually don't really move the needle. You spend a little too much time on your logo or something else that actually doesn't have a ton of value.
Correct.
I would imagine that there has been some bumps in the road when it comes to scaling. What was the toughest thing you've had to experience when scaling your business?
I would not say that we have, oh, that's not true. So we've had a scaling problem, but we are aware that we had a scaling problem. So for us, we spent a long time making sure we have the proper systems and procedures to scale. So on the back end, that means we have asset management teams in place, roles and responsibilities, and then capital, right? Like, do we have the access to capital that we need so that we can properly buy a deal, but also like properly have the reserves for a deal for when things go wrong, because they will. So for us, we bought one property last year, and then it took us about a year and a half to get to the next property. And that's because we took that time to build all of those systems in place. Now I think we're at a place where we probably can add one a quarter. So for example, that Irving property that we purchased, we raised the capital that we needed in four business days, right? But it didn't happen by accident. That happened by like taking the time and the proper time to scale all the different parts of our business.
Yeah.
But
No, you are. In fact, it's kind of a balancing act, right? I've definitely learned this is that a lot of people, we should be taking a moment and like usually even go as far as just when I'm about to work on something, I might hit the record button and just make that part of my SOP, or you can now create transcripts and send it into ChatGPT and have it create an SOP on what you're doing.
yeah,
And so there's then on the other side, we can't be experience paralysis and not taking action because we're stuck on, well, I got to make sure I have this documented and that documented either. There's this balancing act that
absolutely. It's absolutely a balancing act, but it's also like, it's a balancing act where the most important thing is that you don't fall. Right. Like this is a long-term business, especially, we're going to hold these assets at least 5 years, maybe longer. And if we're going to be adding one a quarter, like those systems have to be in place so that it doesn't get untenable. But at the same time, if you notice an opportunity that makes sense, it fits our business plan, business model, we have the capital, we got to strike on it. So it is absolutely a balancing act, and it's a balancing act that people have to be aware of and think through. Just as I'm talking to a listener, where are you at right now? Like realistically, do you have your team in place? Do you have your capital in place? What kind of project can you currently do that's within your parameters that you know you can execute on. If that's a 60-unit property, that's fine. If that's a 25-unit property, that's fine. But then how can you grow your systems to be able to do more and quicker and better, in 2 months, 3 months, 4 months? So a lot of what we do is we implement the EOS system. So we have a quarterly rock framework. We revisit those quarterly rocks every single quarter to make sure that we're on track for our long-term goals and make changes and revisions as needed. One multifamily asset a quarter. What do we have to build from a structured business perspective on a quarterly basis to get there? And I think regardless of who you are, you should be thinking through doing something similar, and you should be thinking about how do you develop your team to get there. A lot of that was before AI. So technically you probably have a smaller team to reach those goals, but definitely then work with your AI using your EOS systems and ask them, hey, I want to add whatever your goal is. Or my goal might be, I want 1,000 units under management, 2,000, whatever. That plan that over a quarterly basis, have clear, concrete goals, objectives, and steps that you're going to be taking to get to that vision.
Yeah, that's kind of a recurring topic as of late. A number of people keep talking about traction in the EOS system, doing that implementation. It's great to see in the fact that you picked a plan and now you're running with it, because it's one of those things. It's easy to get distracted and trying to implement a bunch of different strategies, but in the end, you're not going to see any progress on any of them if you try to run in multiple directions.
Exactly. So you can set it better than I could say it. What's wrong?
Do you leverage anything else regarding AI automations, anything there to help you with the scaling?
The quick answer is yes. So we have different verticals in our team. So my division is CapEx items, asset management items, and then just organizing and scaling our systems and processes. We'll have other people that are focused directly on marketing, finance, and operations. And we use AI into all of those different categories. For marketing, that may look like we will work with our ChatGPT marketing scripts to be able to mirror how we would communicate with investors. And then those ChatGPT scripts with our VA are like actually posting on behalf of us, or that it's in our style, it's in our language, it's how we would say stuff, but we'll use AI to like gather data and information from all of our dashboards from our businesses, compile it into one place so that we're able to talk about it and see it in real time on a weekly basis whenever we have our meetings. We also are kind of students, so we're taking the time to think through right now, what would be the top AI agents that would make sense for our business? For now, we're just compiling that list. So maybe like a 30 long list of different AI things we could create or AI things that make sense to implement. But then using EOS, we'll narrow it down and say, like, what is the number one thing that's going to impact our business this quarter? What's the number one thing that's going to, leverage XYZ vertical? And then we implement that into our business. AI is like huge, integral part of our business. For us, it's about making sure that we properly align it with where we're trying to go and that it supplements what we're trying to do. We don't want to do that all at once. There's a billion different things. It's just, hey, this given moment in time, these are the AI technologies that are out here. These are the needs that we have. Let's implement this. And then we'll revisit in a couple months once that's properly implemented to figure out what we want to do next.
Well, it sounds like your team is using it in the proper way. The reason I say that is because I'm running into a lot of people, because at realdealcrew.com, that's what I do to help. I help businesses implement AI and automations and a few things to scale their practices. But most people see it as a hammer and they're plowing through everything like everything's a nail, and they don't take a second and do what you've suggested, like with your marketing. If you look online, you can tell anybody who's using AI to generate their marketing, it's all the same stuff. Emoji rampant is crazy when you deal with AI, but you can train it with your brand guidelines, with your tone of voice, the way you communicate, and find your own style and help you find your superpower, if you will, in marketing or in whatever vertical, so that condenses the time it takes, not necessarily just throw it out there.
Impact, right? Everyone has an avatar, like their ideal investor, right? Who is the person that speaks well to me. Jack's ideal investor is not going to be Misha's ideal investor, right? We just have different different stories. If that's the ideal person that we got to reach, especially in a world where everyone's getting such tailored specific content, you have to develop very specific, narrow content that are going to meet the needs of that avatar. And that's where AI can be very helpful, but it has to be niched and specific. The more specific you are, the better results you're going to have. Once it's broad and generic, no one's going to resonate with it, and you're not going to see the results you want.
Oh, that's a great point. We constantly say there's riches in the niches, but I don't think people take it as far as they need to. There's niches. When we say riches in the niches, you got to niche your message. You have to niche your brand. You have to niche. It's niche everything and every aspect. I watched Pat Flynn today on a video talking about doing some business, how to develop your business. And he was even saying that the level of simplification you need to go through is actually kind of surprising, because not only you have to simplify your messages, you have to simplify your business, and even to the point of focusing on one thing at a time. So it's really a good timing for that. So Misha, what is your team working on right now, or what are your hopes, dreams, and your future plans? What's your next?
Yeah, so we got a couple really exciting things going on. We're closing on our Irving deal early September. That one, like I said, we already raised the capital for. We're actively underwriting to find hopefully our next deal that will close at the end of the year. And that will be a multifamily opportunity that we will have. But we've also taken a step back to realize investors have different needs. Like, yes, multifamily is great at building long-term wealth, but some people want to diversify into some other asset classes. So we created a Kraft Income Fund, which allows for a couple of different offerings to meet different investor needs. One of them is a triple net lease fund that will generate at least 10% cash flow a year, paid monthly, for those people that are seeing, hey, if I want cash flow, I'm probably not going to happen in multifamily space. This provides that opportunity for them. We're also engaging with a whiskey provider to provide a whiskey offering fund, which is very different. I'm learning that business a little bit, but we're looking at a high double-digit IRR for a 5-year hold. It's very similar to some things that I would see, in a multifamily or single family space in a completely different industry. So just providing another opportunity for someone to get returns, but maybe branch outside of multifamily just so that they're in other alternative investments. So that's what we have going on right now. Our goal is to really just meet the needs of investors and what they have. We don't provide a lot of offerings. We provide things that we think will be helpful and will get them to meet their objectives. If we don't have that, we're not going to just throw something out there. It's something that we personally invest in and that we think could add value to someone depending on what their strategy is.
Well, it sounds like your team is particularly gifted in the concept of specializing, getting it all figured out and dialed in before you even consider the next thing. That's typically the formula for success.
It is a long-term road. It's been a lot of fun. Like we talked about earlier, the team makes the difference. I have an incredible team that I work with, and that makes it fun to go to work every day with people that are excited, energetic, and want to add value. So it's not, we're here to make money. We do make money, but my background is teaching. Another person whose background is teaching. We want to make sure that our investors are set up well, and we will only be successful if they are as well.
Well, and now you have the benefit of some liquid courage if you're investing in whiskey. So that can go a long way when you hit another bump in the road.
And it's great for due diligence. A lot of fun.
Well, this has been a great conversation, Misha. Before we transition into the rapid fire, is there anything else we should have tried to hit on here today?
I don't think so. This has been great. Jack, thank you so much for working with my schedule so that we could make this happen. But I think we covered a lot of great things. If people have follow-up questions, I'm happy to connect with them on it. I think we covered the high points.
Just remind everybody, it's Misha at craftcapitalinvestments.com. But if you're ready, we'll jump into the rapid fire and close out this episode. What lie do real estate investors often tell themselves?
What lie do risks is? The next deal. Next deal will be the difference.
If you could go back in time and give your younger self a piece of advice, what would it be?
Enjoy the moment.
Do you have a book recommendation?
I am back to the classics. So if you see my library, I got thousands of books. I've read a lot, but I'm going back to basics. So Think and Grow Rich, Laws of Success. Those are the ones that I read from a business perspective. I also do really like books that deal with kind of the spiritual aspects of business. So Michael A. Singer, Surrender Experiment, Living from a Place of Surrender at Work. So those things have been really great for me. I'll leave it there, but I would recommend if you're interested in kind of the spiritual component of your work and how those things are not separated, anything from Michael A. Singer is definitely worth a read.
And finally, what single tool or process have you implemented that has had the biggest time-saving impact?
Well, I think EOS has been number one. The second one, which is a lot of people don't have this luxury, so I apologize in advance, but I make it very difficult to drive. So I only drive if it's like absolute emergency if I have to. I figure the more time that I'm home, time I'm not behind a wheel, is time that I'm going to be either getting to walk more, work out more, just be as productive as possible. So maybe a better way to revise that or for a listener is like anything that you can cut out of every single day that gives you more time in the present is worth trying to do, whether that be not driving or getting a bicycle or kind of rearranging your life so you understand those 30 minutes of drive time really add up. So whatever you can do to minimize that will give you more of your time back.
Well, I really appreciate it, Misha. Again, it is craftcapitalinvestments.com. Really appreciate your time. This was a great conversation. I hope you'll consider coming back again sometime.
I hope you have a great rest of your day. And for the listeners out there, thank you so much for taking the time to listen to us.